Hi all, so this is 2004 and it's question 8. It's a purely marginal costing question. So it starts off by telling us that Carroll Limited produces a single product. The company's profit and loss account for the year ended 2003, which during 60,000 units were produced and sold was as follows. And then we've got the sales at the 60,000 units and we have all these costs here as well. Okay, so they're all costs, leaving us with a net profit figure of €198,300. It then tells us that the materials, the direct labour and 30% of the factory overheads are variable cost. Okay, so that's all our information regarding variable costs. And then apart from sales commission of 70 cents per unit, selling and admin expenses are fixed. Okay, so selling and admin expenses are fixed except for the sales commission. So the sales commission part is variable. Okay, then the 6 parts of the question, we're starting off being asked to calculate the company's break-even point and their margin of safety, and then there's a few marginal costing statements that we'll need to do. So before we can actually do any of the parts of the question, we basically have to rearrange this information here into a marginal costing statement. So the format of a marginal costing statement is this: sales minus your variable costs will give you what's called your contribution. Contribution minus your fixed costs will give you your profit. Okay, so what we're going to do is we're going to rearrange all of this information here into that format. Your sales first, then we're going to bunch all of our variable costs together, take that away from sales to get our contribution, then we'll bunch all of our fixed costs together and we'll take that away from the contribution to find our profit. So after rearranging it, all of that information, we should end up with the same profit. So whatever profit we get over here should end up being 198,300. So if you ever end up getting something different to what's in the question, that means you've gone wrong somewhere. So you need to fix that, okay? So you're not like asked to do this marginal costing statement, but you need to do it, okay? So down here I have my little heading ready to go, marginal costing statement, and then I have PU, a little column PU per unit, that's what that stands for, okay? So we're going to have 2 columns here, an inside one and an outside one, okay? So we're starting off with our sales. Remember what way I said the marginal costing statement works. It's sales first. So sales, and our sales are 960,000 euros. That's just the exact same, 960. Okay, then I'm going to have a little heading, less variable costs. Okay, so what does it tell us about variable costs? It says that the materials and the direct labour and 30% of the factory overheads are variable costs. So I'm literally going to write down materials, direct labour and factory overheads because they're all variable. So it was materials first. It doesn't matter what order you do these in. Materials, direct labour and factory overheads. So it's all of the materials are variable costs. So that's the 331,000 euro. 331. Your direct labour is all variable. So that's the 158,300. 158,300. And what does it say about the factory overheads? It says that 30% of the factory overheads are variable. So go to your factory overheads, the 81,000, I've highlighted in yellow there, 30% of the 81,000 is variable. So into your calculator, I'll write this in here, 30% multiplied by 81,000 is variable. So that should give you 24,300 euro. Okay. I want you to add these up. So I always get my students to add these up. I know that there is sales commission in there as a variable cost, but we'll keep that separate and I'll explain later on the question why we did that. So we're adding those 3 together. They're what I'd call your standard variable cost. That's 513,600. Okay, and then the last variable cost is your sales commission. So your sales commission, it says here, apart from the sales commission of 70 cents per unit, the selling and admin expenses are fixed. So that means the sales commission is variable. So it's 70 cent per unit. We know that we're doing this question based on 60,000 units. So my sales commission is going to be 0.70 by 60,000. And that works out at €42,000. Actually, I could have just put that out in the far column. €42,000. Okay, and that then my variable costs, taking that away from my sales, leaves me with a contribution of $404,400. Okay, and now we're just going to fill in that per unit column. Okay, so if this is all based at 60,000 units, so if you're trying to get a price per unit or a cost per unit, we're going to divide all of these figures by 60,000. So to get my selling price per unit, it's 960,000 divided by 60,000, which is €16. Okay, then divide your 513,600 by 60,000, and that gives you a cost of €8.56 per unit. Sorry. And then your 42,000 divided by 60,000 will give us the 70 cent. We're already told the unit cost of that, so 0.70. And that gives me a contribution per unit of €6.74. Okay, so the contribution per unit is your €16 minus your 8.56 minus your 70 cent. Okay, now we're going to go in with our fixed costs, so less fixed costs. And our fixed costs are, starting off with the factory overheads. 30% of those factory overheads were variable, so the other 70% are fixed. Okay, so I'm going to start off with those ones. Factory overheads. So you'll have factory overheads in both. We're splitting into variable and fixed. So that figure is €56,700. Okay. Then it tells us that the selling and admin expenses are fixed except for the sales commission. So basically, the sales commission is built in here with the selling expenses. So the selling expenses in total are €78,000, but that includes the sales commission. And we know that the sales commission was €42,000 because we just calculated it there. So to get the element of your fixed costs for selling expenses, it's going to be the 78,000 minus the 42,000. So selling expenses was the 78 minus our 42 that we already have because of the sales commission. 78 minus 42, which is leaving you with €36,000. And then the admin expenses are all fixed as well. So remember, an admin expense is something that doesn't change, a cost that doesn't change depending on the level of production. So our admin expenses are €113,400 regardless of the level of production. So that's the cost of them at 60,000 units, which is what we're doing now. But if we're producing more, that cost would be the same, or if we were producing less, it would still be 113,400. So now I have them all in. All of those costs have been included in my marginal costing statement, so I'm ready to go. So I'm adding those three together to get a total fixed cost. My total fixed cost is €206,100. And take that away then from your contribution, and you should end up with €198,300, and that's your profit figure. €198,300, which is the exact same as what we had here to begin with. So all we've done there is we've rejigged all of those figures into our marginal costing statement format. Okay, then we're ready to move on to do part one of the question, which is calculate the company's break-even point and margin of safety. Okay, so your break-even point is the point at which they're not making a profit or a loss. Okay, so number one, there's a formula for this that you need to remember. So it's break-even point. You won't be given this in an exam. You'll need to know how to calculate it. So it's your fixed costs divided by your contribution per unit. Okay, so we have all this information now from what we just calculated in the marginal costing statement. Your fixed costs are the 206,100. That's coming from here. 206,100, that's my fixed costs. 206,100 divided by your contribution per unit, which is the 674. So contribution, you can see that word's there, contribution, and that's my per unit column. So the 674 is my per unit figure. So divide that by 674, and that will give you an answer of, we need to make 3,579 units to break even. So to cover all of our costs, we're not making a profit or a loss, we need to produce 30,579 units. If you put that into your calculator and you get a decimal, you need to always round up to a full unit, even if it's 0.2 or 0.4, because they have to sell that last unit to actually cover their cost, and they can't sell 0.2 or 0.4 of a unit. Okay, next part of that one was to find the margin of safety. So this is looking at our current level of sales minus our break-even point. So margin of safety. It's your budgeted sales minus your break-even point, BEP. So our budgeted sales at the minute, our sales are 60,000 units. We're all in units here, so 60,000 units minus my break-even point, which I just calculated up here, of 30,579 units. So how far, my current level of sales is 60,000. How far can I fall back before I hit my break-even point? That's what the margin of safety is. So our sales can fall by 29,421 units. You need to write units after it or else you'll lose marks. Okay, and that's the first part of your question answered. So that's your break-even point and your margin of safety. Before I move on to part 2, I just want to explain this to you. I said earlier in the video that I'd explain why I asked you to keep the sales commission separate. And the reason for that is because in a lot of these questions in kind of more recent years, this is 2004, so it's quite old, but in a lot of the other questions, the sales commission was percentage based, okay? And it means that the amount of commission the salesperson receives is based on the sales that they've made and the value of the sales that they've made, okay? So in a lot of the other questions, it might be that the sales commission is 5% of the selling price, okay? Which means that if the selling price changes, then the amount of commission that the staff are due to receive also changes. So an example here is, on the left-hand side here, I have the selling price. So the selling price at €10, €12, €20 and €50. And you can see there, I've calculated 5%. So if a salesperson was selling something for €10 and they were getting 5% commission, it means the commission they'd receive is 50 cents. If they're selling something for €12, the commission they'd receive is 60 cents. If they're selling something for €20, they'd get €1 in commission. And if they're selling something for €50, they'd be getting $2.50 in commission. So basically, the more expensive the item is that they sell, the more commission they receive, okay, which makes sense. So the reason that I would ask you to keep your sales commission separate over here is because when we get on to the next part, if in the sensitivity analysis, which is where you're changing something to see what effect it will have on your profit, if the selling price changes at all, then your sales commission will change. So if any element of sales changes, then the amount of commission will change. And that's why I want you to keep it separate, okay? So we'll now move on to point 2, okay? So point 2 is calculate the number of units that must be sold in 2004 if the company is to increase its net profit by 15% over the 2003 figure, assuming the selling price and cost levels remain the same, remain unchanged, okay? So to do this one, this is point number 2. It's your fixed sugar. It's your fixed cost plus your target profit. You can only do this if nothing changes, only your profit. Okay, so fixed cost over your target profit divided by your contribution per unit. Okay, that's what you're going to use. So our fixed cost is 206. It's 206 euro, 1,000 euro, 100. Plus our target profit is increasing by 15%. Okay, so it's increasing by 15%. So into your calculator, so it's increasing from last year's figure. So 198,000, 198,300, and we're increasing that by 15%. So our new profit is going to work out at 228,045. Okay, and you're going to divide that by your contribution per unit, which is the 674. Okay, so then into your calculator, the 206,100 plus 228,045, and you're dividing that by 6.74, which works out at 413.204 and so on. But you always need to round up here, okay? Because they need to sell that final unit to actually hit their target profit. So that means your answer is going to be 64,414 units, and that's the amount that they have to sell. So to make a target profit of 228,045 euro and cover their fixed costs, they need to sell 64,414 units. Okay, and that's the answer to that one. Okay, now we're moving on to a bit of sensitivity analysis. So we have point 2 done now. Point 3 is they want us to find the profit the company would make in 2004 if they reduced their selling price to 14 euro and increased their fixed cost by 14,000 euro, and thereby increase the number of units sold to 75,000 units, with all of the cost levels and percentages remaining unchanged. Okay, and I like to use a formula for this, and then it kind of turns into algebra. So I'll just explain the formula to you first. So number 3, this is the formula we're going to use for the rest of the sensitivity analysis. Okay, so it's sales minus your variable costs is equal to your fixed costs plus your profit. Okay, so there's 2 parts to sales. There's the selling price per unit, selling price per unit multiplied by the number of units, or the number of units multiplied by the selling price per unit. So to get your sales revenue, it's the number of units that you're selling multiplied by the price that you're selling them for. Okay, your variable costs, they are the same. They're based on the level of sales or the level of production. So again, that's your number of units multiplied by your variable cost per unit. Okay, and though your sales minus your variable cost will be equal to your fixed costs plus your profit. Okay, and your fixed costs and your plus your profit, they're standard. There's no multiplication going on there. Okay, so basically what that is there, that formula is me it's using the marginal costing statement, but instead of vertically doing it horizontally. Okay, so we're going to use this formula for each of the sensitivity analysis questions, and it's sensitivity analysis is when you change an element of the question. So it could be that they're changing the selling price, or they're changing the number of units, or they're increasing their fixed cost, or they're trying to find out if they spend X amount of money on a new machine, what effect it'll have on a profit. Okay, so it's checking to see what effect certain things will have on the profit. So here for point 3, they want us to find out the profit. Okay, so basically whatever you're trying to find out, that's where an X is going to go. So with doing this one, you have to fill in the formula, and the X is going to be at profit. Okay, so when we're filling out the formula, we're going to have enough information to fill in the sales, the variable cost and the fixed cost, and we're going to put an X where the profit is, because that's what we're trying to find out. then we're going to use algebra to solve it, okay? So it says to calculate the profit the company would make in 2004 if they reduced their selling price to 14 euro, they increased their fixed cost by 14,000 euro and thereby increased the number of units sold to 75,000 euro with all other cost levels and percentages remaining unchanged, okay? So what's going to happen here is we're now going to start filling in the formula, okay? So our selling price is changing. Our selling price is changing to 14 euro, okay? So it's 14 euro multiplied by the number of units, which is 75,000 units, and that will give us our sales figure. Then we're going to subtract our variable costs, and our variable costs are the number of units, which is 75,000 euro, multiplied by the variable cost per unit. It hasn't told us there's any change in the variable cost per unit, so we're referring back to our marginal costing statement up here. And there's two elements to our variable costs. There's the 8.56 and there's the 70 cent. Okay, 8.56 and 70 cent. 8.56 plus 70 cent. So in other questions where the sales commission is based on a percentage, we would have to change that sales commission. So in this question, it's not based on a percentage, so we're leaving the sales commission at 70 cent. But if it was based on a percentage, we'd have to change the sales commission here because the selling price has changed. So just bear that in mind when you're doing a different question. Okay, so 75,000 multiplied by 8.56 plus 0.7. Okay, and that is equal to our fixed costs. Is anything happening to our fixed costs? I think there is. It says that the fixed costs are going to increase by 14,000 euro. So our fixed costs were 206,100 and we're increasing that by 14,000. So show both of those figures. So 206,100 plus 14,000. And my profit is what I'm trying to figure out. Okay, and now it's as simple as just using algebra. Okay, so multiplying out the 75,000 by 14 should give you 1,050,000. And then you're multiplying your minus 75,000 by the 8.56 plus 0.70, which gives you minus 694,500. Which would be equal to the 206,100 plus 14,000. Your new fixed cost is 220,100 plus X. And now we're going to use algebra. We're going to bring this 220 across the line and it will become a minus. So you'll have your 1,050,000 minus this, which will leave you with a profit figure of X equal to 135,400 euro. So that's your answer. Your profit will be 135,400. So basically, once you are able to fill in the formula, then you will be able to calculate your answer. Okay, and that's it. We were asked the profit, so make sure that you're showing the euro sign because your answer is in euro. Sometimes your answer might be in units. Okay, so you need to make it really clear when your answer is in euro and your answer is in units. Okay, now we're going to do the same thing for the next question. That's point 3 done. We're now moving on to point 4. Okay, so going back up here, it says the selling price. So they want us to find the selling price. Okay, so the selling price the company must charge per unit in 2004 if fixed costs increase by 10%, but the volume of sales and the profit remain the same. Okay, so the volume of sales remains the same, and when they're saying they remain the same, we're referring back to the 60,000. Okay, you're not referring back to the amount for point 3 every time. You're referring back to the original figure. Okay, so they want us to find the selling price the company must charge per unit if the fixed costs were to increase by 10%, but the volume of sales and the profit remains the same. Okay, so here we go with point number 4. Part 4 of the question. We're going to use the same formula again. It's our sales minus our variable costs will be equal to our fixed costs plus the profit. Okay, so our sales, we're trying to find the selling price. Okay, so we're trying to find the selling price. So our sales, remember there's two parts to this. There's a selling price and there's the number of units. We do know the number of units. The number of units is 60,000 units. We don't know the selling price. So that's where my X is going to go in this question. Okay, my variable cost, we know the number of units, so it's going to be 60,000 units multiplied by our variable cost per unit, which hasn't changed. So we're just using the exact same as the original, so the 8.56, the €8.56 plus the 70-cent commission. Again, if you're doing a more recent question, your selling commission would have to change here. That's equal to our fixed cost. They're increasing by 10%. So it's going to be 206,100 plus 10%. So 10% of that is €20,610. And my profit is remaining the same. So my profit is the same as what it was in the original, which is the €198,300. So you're going to add 198,300. Okay. And now we're ready to go. So it's going to be 60,000 X. I'm going to leave that on the left hand side, 60,000 X. The rest of it is all figures. Okay. So if you multiply that out, my variable cost, it'll work out at minus 555,600. And then on this side, my right hand side, it's working out at my new fixed cost is going to be 226,710, and my profit is remaining at 198,300. Okay, so again, we're going to start using algebra. We're carrying the variable cost figure, the 555,600, across the line. It was minus and then it becomes a plus, so it's going to work out at 60,000 X is equal to 980,600. So that's bringing it across as being a plus. So what I've added up there is 226,710 plus the 198,300 plus that variable cost that I brought across. So then to figure out what 1x is, divide both sides by 60,000. So it's leaving me with 1x is equal to 980,600. Sorry, that should be 610. Apologies there. 610. That works out at X is equal to €16.34 per unit. So they have to sell each unit for €16.34 for them to make a profit, for their profit to remain the same, but their fixed costs are increasing. So that's your answer for that one. We're now on to part 5. In part 5, what they're asking us to do is they want us to find out the number of units that must be sold at €17 per unit to provide a profit of 10% of the sales revenue received from these same units. So it sounds like a bit of a mouthful, but it basically means if you're selling an item for €17, you want the profit to be 10% of the revenue. So if the revenue is €17 and your profit is 10%, your profit will be €1.70. So that's what that means. So it's how many units do we have to sell at €17 per unit to get a profit of 170 per unit is what it means. Okay. So we're going back to the formula again. So this formula never fails. We're going to part 5. Okay, so write out your formula again. Sales minus your variable cost will be equal to your fixed cost plus your profit. Okay, so my sales figure is what I'm trying to find out. So it's how many units that must be sold at 17. So it's basically going to be 17x, okay, because it's €17 per unit and we're trying to find out how many we need to sell. Our variable cost is going to be the amount that we need to sell multiplied by our variable cost per unit, which again is not changing, 856 plus 0.70. So unless it tells you it's changing, you're assuming it's not changing, okay? And our fixed cost, that's also remaining the same, so that's the €206,100. And my profit is going to be €1.70 multiplied by the number of units that I'm selling. So remember, it says that they want each unit to provide 10% profit based on its revenue. So if it's €17 per unit, that means they want to have €1.70 profit per unit. So to get my total profit, it'll be 170 multiplied by the number of units that we're selling. And now we have our formula filled out. you just start doing your algebra again. So we're going to have lots of x's on this one. So we're going to go 17x, and that's going to be minus 9.26x. And while I'm here, I may as well bring the 1.7x across, becoming a minus 1.7x is equal to 206,100 euro, which leaves me with 6.04x is equal to 206,100, and x, divide both sides by the number in front of x, which is 6.04. So x works out at 34,123 units. Again, if you're getting a decimal there, you need to round to the nearest full unit. So the amount of units that they would have to sell at €17 per unit to end up with a profit of 170 for each unit is 34,123 units. And that's how you do the calculations on that.